I just committed the cardinal sin of investing, and that is to not follow my strategy when I was doing trades. And that has set me back in the first month of 2026 in a way that might affect my entire year. All right, thanks for joining me today on Discovering My Dividends. This is my investment challenge series where I'm talking about how I'm trying to take $50 and make $1 million in less than 7 years. And I've created this strategy over my last 3 to 4 years of trading. So what's going on is I decided that I was going to buy into a couple stocks. Now, the people who are out there who think if you make a mistake while trading, you've kind of sunk yourself, that can be true. But in this case, I'm going to kind of explain how following my strategy to a certain point, also, even if I do make a mistake, does help me to kind of get through kind of the low points. Before we get going, just want to let you know I'm not an advisor, so anything on here is not advice. It's just sharing my experience, and of course with my investment challenge to kind of talk about how I'm actually doing investing $50 a month, or actually $25 a paycheck. And with that, I'm going to get started here. So what happens is I decided to buy a stock that didn't have the dip that I'm looking for. So typically when you're looking at a stock that has highs and lows, like stocks are going to go down and then they're going to go up and they're going down. And everyone's like, well, when they're down, there's a problem. They don't want to buy them. When they're up, they're like, great, I want to buy them. So that's kind of the natural instinct. Oh, they're doing really well, I'm going to cheer for the guy who's leading, and boom, yeah, there we go. So really what you want to do with stocks is think of it more like when you go shopping. At certain times of the year, stores are going to jack their prices up because they know people are shopping and they're going to spend money, so they raise the prices a little bit. You don't want to be there because prices are going to come back down. And what you're looking for is the sale. You want to know where there's a sale. Now, how do you know the difference between a sale and a stock that's crashing? Well, when you're kind of a person who's putting minimal amount of time into it, you're just an average investor who is, I shouldn't say average, but if you're like investing from home as opposed to the average investor who's professional, you don't have maybe as many resources or maybe as much time to invest into it. So you're going a lot more off of, different little things you might hear. So what you want to do is kind of create a plan, create a strategy, have a way of doing things that kind of put you in a position where even mistakes can kind of be something you kind of live through and work through and then end up going. So one of the things that I have is I never sell for a loss, and I'm only buying dividend stocks that I'd be willing to hold long term. And long term may not necessarily be 20 years, but I feel comfortable that this stock is going to be relatively strong for the next 5 years. Hopefully I'm not holding it for 5 years because it goes against my overall strategy of trying to compound the small buys and sells that I'm doing. But nonetheless, if I end up holding it, I don't have a loss and I'm going to retain a dividend. Now, some people would say that's really stupid because you want to have that money available to invest in something that's going to get you more profits. And that's true. The longer I hold it, the more I diminish the value of that opportunity. But nonetheless, it is my strategy, and it's held out so far. I've had to hold stocks for several months. Probably about 3 to 4 months is kind of the range. Didn't actually at the time keep track of that, but recently I've held for several weeks. So what happens then is instead of being able to buy and sell every day, I'm now only getting that gain at the end of that time. So stocks that I recently purchased were going down, and they went down significantly. They'd had previous declines, and I thought, I feel like they're in there. I did some calculations on what their value is, and I felt like they were getting down to that point where they're at their value range. I know from watching the stocks that stocks that are sliding from an area where they're typically priced above their range, and they start to getting to the range where they should be priced, tend to go a little bit further because there's kind of a dip now and nobody wants to get caught holding it. So the big guys, whoever the big guys are selling them off until they get to a point where they're like, hey, this looks like a good buy again. And then somebody decides, oh, we're going to start buying it. And then everyone goes, hey, well, let's buy it now because it's going to get much higher. And that's kind of a simplified version. It's something you might see on the movies. But essentially, what I'm trying to look for is I'm trying to find that price that's below what their actual price is, the value of the company if they were to sell it based on what it holds or owns, or what kind of sales it has. These types of things tend to kind of make a line in the sand, right? So some will, if you read different news articles about the value of a company, some will say a certain price and others will say a higher price, or some will say a lower price, and then you get a range. And if you're in that range, you still might want to kind of let it dip a little bit lower if you're looking for a lot of value. But in my case, what I'm looking for is a guaranteed turnaround, and the lower the price is, the sooner I'm going to get that turnaround. I've bought stocks where they were just kind of reaching the line in the sand, where I felt that's where they were, and they maybe went a little bit low, and I bought in, and they've been sliding again. So that's more recently what happened. Whereas at the beginning of the year, I was finding those stocks that were much lower and had the quicker turnaround, which helps my strategy. So in my case, I definitely don't want to be looking for the stocks that are on a continual slide. If they've leveled out a bit, you might have a little bit better luck with kind of deciding, yes, these are going to turn around. And the reason I do this, and it's probably like most other investors, is I don't want to miss out on the opportunity. So I'm looking for something sliding and then it's going to bounce, and I don't want to miss the bounce, so I buy in before they hit the bottom. And recently I bought in way too early, so I'm holding some stocks, and there you go. Now today I just had a stock sell that I've been holding for about a month and a half. Well, is it 6 weeks? Maybe. No, it was about 4 weeks. I've been holding for about 4 weeks. Finally had a stock sell, and so I had some cash, so I reinvested that into something else, which I feel like is at the bottom. Now, as I said, I'm not an advisor, so this is not advice. So here's what I did. I bought TELUS, and I actually bought TELUS at a couple different times because I thought it's at the bottom. It's at the bottom. And it kept going, and then it stayed down there. It's been inching its way back up. And I didn't keep buying because I didn't want to be all in on TELUS. And that's just because I want to have my money spread around. And I didn't really foresee it going as low as it did. And it's probably a good thing because I would have been sitting on it for a long time. But it finally came back up to one of the buy prices. And then I went ahead and I turned around, and with that TELUS sale that went through today, and it's only one of the TELUS purchases I made out of the 3, I went ahead and bought Rogers, so RCI.B, and I just got notification that Rogers sold right away. So the first one is buying in too soon when it went down, but here Rogers was already down and sitting kind of in that lower end rather than the upper end, and it had already kind of plateaued a little bit, and I went, I'm going to buy this with the money that I got from my TELUS sale, and Rogers has already given me its 1%, so I got that sale in one day, and that's the whole thing that I want to do. But instead I've been buying too soon. So finally I think I've got slapped in the face enough by making that mistake of buying too soon and looking for stocks that are still sliding instead of looking for stocks that have slid and plateaued. Therefore I get my turnaround. So a little bit of babble on there about what's going on, but I'm just going to let you know here, I do use WealthSimple. WealthSimple is my broker. They are not paying me to say this. I'm telling you, I use them because I like them. They're easy to use, no fees on any Canadian stocks or ETFs. So if you use my link, we both get a reward, same reward. And then I'll also let you know my next video is going to be talking about the month end. I think we're at the month end very soon. We're a few days away to let you know how the beginning of 2026 went. So January, how did it all fit together? And it's been kind of an interesting month because I did have some good and some bad. I'll let you know in the next video. Thanks for joining me. See you next time.